So do you think the investing in the stock market is only for Wall Street pros or people with big money? Think again. From fractional shares to user-friendly apps, it's never been easier for everyday people to start building wealth through stocks.
Joining us this morning with simple steps to get you started, even if you've never invested before, is financial coach and stock market mentor Jason Brown. He's the best-selling author of 5-Year Millionaire. So Jason, good to have you here.
Dan and Hazel, good to see you guys.
Okay, so here's the question, because some folks look at this and are like, I don't know what I'm doing when I buy a stock. When you buy one, what are you actually buying?
Yeah, so when you buy a stock, you're actually not just buying a piece of paper. You're literally buying ownership into a real company. So think about the Apples of the world. When you buy a share of stock, you are literally becoming a partner with Steve Jobs. You are becoming a partner with one of the biggest companies in the world, but without having to worry about building a management team, having to negotiate tariffs, or even deal with running a national retail chain.
So why, though, should people invest in the stock market, just even to begin with?
Yeah, so people invest in the stock market for a lot of reasons, but I think the number one reason when you zoom out and think about big picture is just the fact that your money can work harder for you than you can work for it. So when you start thinking about retirement, you start thinking about putting a kid through college, someday paying off your home or paying it off a little bit early, that's all made possible by putting a little bit of your money to work and having to start to generate more money so that you can change your real financial life, whatever those dreams and goals are for you. So that's the real reason to invest. Have that money kind of accelerate the path to achieving some of your goals without you putting in physical labor for it.
So how do you kind of get started though, right? Do you have some apps that you can download that kind of do this for you? They pick the stocks, you give them money, they pick the stocks for you. Or should you actually pick the stocks yourself?
You could actually pick the stocks. I typically encourage people to just look at the companies that they do business with, look at some of the things that they like. If they like carrying their Apple phone, it's typically a good place to start and say, what is Apple stock? If you like an Android phone or you're always searching on Google, watching YouTube videos, good place to start to look at Google stock. Maybe you wear Lululemon clothes, good place to start to look and say, I love the company, I love their customer service. What is the stock price doing? And start to think about the companies that you love to do business with. Now, from a getting started standpoint, it's never been easier to open an account with Charles Schwab, with apps like Robinhood. You can open it right on your phone. You have direct access to the market. And what's also important to understand is most of these platforms have a practice side to it. And a lot of people don't understand that you can actually practice before you put real money down. So you don't have to worry about losing your money or hitting the wrong button. You can practice in a simulated environment and start to get experience and see what would have happened had you put real money down on that company that you like.
I mean, what about people, though, that don't have a lot of money or live paycheck to paycheck? Do you need a lot of money to get started?
Yeah, so you don't need a lot of money to get started. What you need is knowledge, and then you need access to the capital markets. There's an example that goes, would you rather have $1 million once, or would you rather have a penny a day that doubles for the next 30 days? And if you took that penny that doubles, at the end, you would have something like $10 million or well over $1 million. The point is, getting started with what you have, which is if it's a penny, you may think, what can I buy for a penny? But remember, you can practice for free. So that costs nothing to practice. Then also, a lot of companies allow you to buy fractional shares. So if a company may be too expensive, you can buy $2, $3, $4, $5 worth of a share. Now, that's not going to get you rich, but what it is going to do is get you in the game. And that's what you want to do, is get in the game. And as you get more comfortable investing and you start to see results, then you can look for ways to add or fund more money. But what's important is that most people get into the game.
Yeah, you make it sound easy, but what happens when your stock starts losing money? Do you sell? That's when you start to panic.
Yeah, that's a great point. So when you look at the overall market, I typically tell people, instead of coming out trying to be a stock picker or picking individual stocks, although you can if it's a company that you like, think about the overall market, which is the S&P 500, which is the top 500 companies in the U.S. economy. On average, when you look at any period of time, over 2-3 years, on average, the S&P 500 returns 11% return. So even if the stock market is down this week, this month, this year, if you look out over a 2 to 3 year period, on average, the S&P 500 returns 11%. So what I'm basically telling you is if you stick with an ETF or the larger index coming out the gate, even when you're down, don't panic, give it some time. Long term, the market goes higher.
It's hard not to panic. But Jason, thank you so much for all your tips and great information for this Picks Financial Fix. Great to have you.